The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 24th day of July. My pleasure to be here, and thank you to our great hosts. Hey, very interesting market. Did a lot of work over the weekend, looking, perusing, going through charts, going through sectors, trying to get an assessment of how to present in this coming up workshop, two webinar series a week from Wednesday. That's August the 2nd and August 16th. The big question is, will sector rotation continue to hold the market up going into 2018? And I must say that as we've rotated through the various sections and sectors and the different stocks, so I'm getting a real feel for what has worked and what I believe might not work this time, so that in the presentation I'll be able to further elucidate on what I believe are stocks that are holding well and giving us a kind of a heads up to say, you know what, if there's another rotation, there are one or two sectors that did not participate in any of the big run-ups, and maybe they are getting ready to do that, as well as trying to decide, and we'll know a lot more about it, what is going to happen in the whole retail area. And we'll know with Google's earnings coming out, I think it's today or tomorrow, we'll get a really good feel for not just the activity, it's really the number of sales and what has been impacted when Google reports. So that's Google reporting. We've heard the same thing with Amazon, but Google is giving, for me at least, a sense of the broader aspect. It's not just markets, it's kind of international. That's kind of the way I want to look at it. So let's get to the nitty-gritties. The E-mini is down 4 at 24.65. No big deal. Still above the low of Friday, which was at 24.62.75. But I am a little surprised because I did have a reading in my Chapman Wave trend gauge to suggest that within 2 sessions, there should be a strong move of 9 to 11 points off the low. That would be the low of Friday. And well, I suppose in a way we've had that, but that's really not what I was looking at. 24.62 to 24.70, 8 points. No, that's not really not what I'm looking at. What I'm looking at is a sudden burst of strength that takes the Dow and the S&P quite a lot higher in a straight line move. It doesn't necessarily have to go positive, but it needs to go higher. In my case, I really need to see it go positive. Dow needs to go positive, or at least the S&P. So let's go through this. What we're looking at is in the 120-minute chart, there was a peak D in the Chapman Wave. 120-minute E-mini, September E-mini futures at 24.73, round number high. Pulls back from the 24.73 level to the 24.62s, 10 points, no big deal, but it has made an arch. And when I said to subscribers this morning that the arch pattern going to a lowercase m is really what we're looking at there. And we're looking at it in the 120-minute chart, if I can find it, of the Dow. Right there it is, of the Dow 120-minute chart in each picture. Let me just get it. Sorry, there it is. So that's the 120-minute chart, and I drew in an H, and I drew in another H to make a lowercase m. The big challenge was that with the Chapman Wave trend gauge, we should have seen a move that really took the E-minis positive and the Dow a little bit positive. So this is somewhat disappointing. It's still within the context of being able to rally, but this will be a failure if it doesn't do that 2 days. So that's today or tomorrow. So it doesn't have a really strong rally. To my eye, the Dow needs to go about 21,570. It's about another almost 50, 55 points from here to the upside. We'll see what happens. All right. Meantime, back at the ranch, these are the things that I'm really looking at here. Within the context of where we are, look, if I go to the Dow INDU, the Dow has gone to a peak C. I could have given this an alternate count by saying that would be A, B, C, D, E, and then it's already an E with an alternate count. I don't want to go there just yet. I don't see any reason to do that. Also, I have got a leg C no matter how I count it in the weekly chart, and I suspect that we will get to, well, I suppose I could call it an F. No, I don't want to do that. I'm just going to stick with my strictures right now, and I'm suggesting to you that there should be higher highs in the Dow, higher highs in the S&P, Dow down 63 at 21,516, little deeper pullback than I was anticipating. If there was a pullback, S&P is holding very well, only down 4.5 days young at 2467.91. It hasn't taken or gotten even close to Friday's low of 2465.06. Let's see how this works out. I think there still will be a D. Now, this is fascinating because, look, if I keep going through them, the Qs have made a single leg A to the upside. I said that I'm going to call it a gray A, just for now. And what happens is, with the MACD still strong in the stochastic, see the stochastic flattening out at 96, that is really good action. I have to watch it closely. We had the same thing, remember, last time that we were here in June. I was saying, you know what, stochastic holding well. It's in the 96, I think it was in the 96, yep, 96% area. Let's see what happens. But I was getting a little nervous, and then boom, we suddenly had that big sharp pullback from the 143.90 level on the 9th of June. I'm not sure that's going to happen here, but I am watching it closely. And why did I call it a gray leg A? Because this has all the characteristics of a single leg A to the upside syndrome, I call it, that can fail. The difference is that when the stochastic stops dead in the mid-90s and holds flat, that can go to the right quite a little bit longer. That means we could still go to a B, C, and a D. I don't think that's going to happen. I think this is something I'm going to have to keep an eye on really closely. So QQQs at 143.93, a pullback in the next 3 days underneath 143. Wow, I'd even say 143.20 would be a heads up to say, oops, it could be a failure. So be careful. A new recovery high above 144.44 would be very positive. I don't know how it works, how it will work, but if it does that, have to consider it to be very important. There's the majors, the vectors, market vectors, semiconductor ETF. Let me just move this away. In a retracement failure mode, I shouldn't use that term because people get confused, but that's what I do call it. Let's call it retracement mode. It's under the previous major high of 89.72. It's at 87, down 47 cents. And I've got this as a gray B. And it's really difficult to say that it's going to fail because the stochastic's at 96%. 90%. Listen, I'm saying, gee, we've seen this picture before. How does it come out? Very simply, at 86.99, if there's a close up 86.10, next days or so, that's going to be very negative. If there's a push to new recovery high above 88.03, that is positive. We will look at the Canadian dollar in a moment, but in the meantime, we've got a coming up.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. David White has just announced a new online course that he'll be premiering to his subscribers the evening of July 26th, The Next Wild Wild West of Computing. Machine learning will be the biggest growth area for tech companies in the next 10 years. Make sure you're ready to capitalize on that opportunity. With over 50 types of algorithms and growing, Dave White will tell you why there are so many areas for companies to apply this to their business to both sell and consume. Right now, you can get a 30-day free trial to either of Dave's newsletters, Path of Least Resistance and The Technology Insider, as well as get a 30-day money-back guarantee when ordering Timing the Trade charts. Don't miss out on the next Wild Wild West of computing as it premieres July 26th for all subscribers to Dave White services. For all the details and to sign up today, visit the front page of TFNN.com.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Everyone, we're back. So let me just finish this up here. Excuse me, and I'll go to the questions. The Qs, 143.99, down 12 cents. A break above 144.44. I would say I'd prefer to see it really go to 144.52-ish. And then I'd say, oh, wait a minute. This is very strong action. No failure here, just sitting beautifully. And we should see higher highs to come in the QQQ. It's very interesting. So what I'd say is this SMHs pulling back at 87, down 47 cents. Watching it closely, a close under 86.10 would suggest to me that the SMHs semiconductor index will fail the ETF. If we're looking at the IWM, now this is going to be very interesting. Look, IWM has already made a peak D, very quick, A to B to C to D. And that says pullback is often what one would see. That would be the expectation. But it made a higher high above 142.90, and that went to, I'm calling it an F for now in the weekly chart. Now, when we're looking at the weekly chart, look, the QQQ is in a G/C. So a lot depends on a breakout to the upside this week in these different indices. If you look at the New York Stock Exchange, NYA.X, that has made a peak E. So it's more advanced in its daily. It's pulling back. Weekly chart is still very strong in an E/B. And what I'm really looking at here is if you go to the IYT, which is the transportation index, that has had a pretty severe pullback from the 175 area. The exact number is 175.75 back on the 14th of July. Pull back, it's quite severe. And same thing in the weekly chart. Monthly chart is still looking very good, leg D to the upside. The close this Friday is going to be very important in my work. That's the reason why this webinar is going to be so important, because what we're looking at is we've seen how these rotations have occurred before. We see this cup formation in the IBB. It's down 78 cents at 324.05. This is an E/C with the right shoulder showing a little bit of a mixed message because the MACD is not as strong as it was when it went to the peak D at 323.45 on the 22nd of June in the iShares NASDAQ Biotech ETF. But look, the stochastic is at 88%. That is quite good. How does it hold? Does it stay? Does it flatten out? So a lot of things again, and that's part of this rotational process. Look, the IBB was up at 400, plummets down to the 240 level, and hits a high in this retracement in the 324s. Got to watch this, because as I talk about rotation, we're going to see whether or not, within the context of rotation, any pullback that we see in the general market, and I'm going to show you something very interesting in a few minutes, in the longer term trend picture, what happens in the monthly charts? Because there are a lot of resistance levels in the weekly and the monthlies with rising trend lines that are coming into focus. For Dow, it's 21,000, somewhere in the 21,000, I'd call it 680s to 21,730s. There's going to be a lot of resistance. So how does that unfold? And does it unfold over a period of 6 months now, going into the end of the year? Do we only get maximum of 5% pullback, and then we're up to new highs, or is it going to be more severe? These are things I'm going to discuss. What, in fact, could save us? What's going on with the TLT? The TLT right now down 29 cents, had a nice bounce, but it's kind of stalling in this 126, 125 area. So what happens to bonds? What happens to the TLT in this particular period? Does the TLT rally, continue to rally, which would suggest that perhaps we'd see some weakness in the general market? Those are questions that I want to answer. And what are we going to do about it? What stocks are looking like they could hold quite well? They could have a good rally. You don't even want to be near some stocks at this particular level with the chart patterns they're forming. And that's what we'll be going through very, very carefully. And you'll get a subscription, a trial subscription to my daily service. So now let's do a couple of things here. Look at crude oil, CL. Crude oil is up 59 cents. It had quite a severe pullback over 2 days. Let's call it 3 days, including today's low, even though it's a nice green candle today. It's at 46.36, up 59. So the question is this the time to be looking at the USO, which is the United States Oil Fund? And I'm going to suggest to you, just for this moment, I would still not be doing anything. I'd be giving you a little time out. And I'll tell you what, look at Halliburton. Halliburton's down $1.26 today at 43.12. This is one of the stocks that I kind of glanced at. I didn't do any notations or anything, but I just wanted to go through them over the weekend. There were a few that I looked at. And I'm saying to myself, you know, the pattern of rally and failure has been so consistent in this whole oil area, in the oil service and the oil in crude oil, that until there's something I can see evidence of real strength, like the OIH, which is the same thing, down 20 cents at 24.82. Until the OIH can really sustain a move in the 26.80s to 27.30s, I'd like it even higher, but let's just say that would be the first step, 26.80s to 27.20s, and it's at 24.81. I'm skeptical. I'm looking at it askance, saying, you know, you just can't hold any rallies. Look at this weekly chart: lower lows, lower highs, lower lows, lower highs. Tries to close over the 9-period moving average last week, fails. No, this is not good for market vectors, oil service, or even for crude oil. Now, the other thing I want to look at here is within context of markets. I wanted to say that the RTH, got a couple of questions about that right now. Holding okay in the lower area at 80.39, up 5 cents. But here again, the weekly and the monthly are suggesting that there's more weakness than strength right at this particular time. And you've seen in the daily, as it's trying to rally, and it keeps making these H patterns. This is the biggest gain that it's had in a while, and it's starting to look like it wants to give it up. So at 80.39, the market vectors retail ETF, RTH, trading at 80.39, up 5 cents. I'm just suggesting to you, until it really breaks, here again, it's like oil. I want to see it trading in the 81.60s to 82 area in the next 2 weeks. And then I'm going to say to you, aha, now we're finding the rotation is making much more sense. We know where we're going. And that would put us in the spot of looking at Google, Alphabet, doing the exact opposite. Very strong leg to a leg B this morning, up in the high range in the weekly chart, high range in the monthly chart, and it's holding very well so far. So until Alphabet, or Google, I like to call it Google, trading at 971 down 1, so it really breaks under 954, that'll be a big problem. But at 971 right now, it's holding well. If it has another pop to the upside, you've got to expect that it's going to make at least a D in the daily, and you're making a cup formation, a jagged V-shaped cup formation. Okay. Now, a couple of things I wanted to say is the XLF has just held in this higher range at 24.83, up 3 cents. It really isn't giving us tremendous information. It made a deep cup formation from the March high of 25.30 down to the low that was made in April at about 22.5, and then it runs back to 25.19, doesn't take out the new high, but there is a chance that it's making a little cup and handle formation. Well, let's put it together with the TNX. The TNX is TNX. There we go. The TNX at 22.52, up 22 cents, holding the 200-period moving average. You know, it's in the range, and that's really what I've been saying, that yields pull back quite sharply after rallying, and now they're just kind of stuck in the range. I'll be back. Basil Chapman, Tiger Technicians out.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi everyone, we're back. Dow's down 72, S&P's down 5. Now this is going to be very interesting. The XAL, I had a bunch of questions about the transports, etc. The XAL, which is the ARCA Airline Index, is down 107 at 116.58, almost 1%. This has made a peak F top of the Chapman wave right there on the 17th at 122.13, trading now at 116. So that's almost 7 points down. I'm suggesting to you that leg D, probably a peak D in the weekly chart, is part of why I'm saying that I'm anticipating. I thought there'd be a rally today to be able to get us to that leg D. See if I can do the SPY, it's a little easier. So this is B, calling this E/C, and I thought it would go to a D just to clarify everything. We'll see. And I've got an F/C in the weekly chart. This is a very important week as far as I'm concerned for a number of reasons. If we don't get that extra rally and we start to slide further by the end of the day and then into tomorrow, I have to consider that something's happening here that is in relation to other aspects of the market that I'm looking at, where I was expecting just one more pop to new highs. Maybe we won't get that, and then we just start to pull back from here. But in the meantime, let's just make it very simple. The Dow's at 21,510, a close under 21,000. I would put it, I got to have a little safety factor, but in the 21,350s in the next few days, says, uh-oh, real problem. And a push towards the highs of 21,000. The Dow high, all-time high so far is 21,681, I believe it is. Yeah, INDU, 21,000. Yep, 681. We'll work our way towards that. But everything so far, I don't really see a reason right now to make a change in the notation. I still think that somehow or other it'll work its way higher. Let's see what happens. Question about GCO. Now, GCO, what GCO is a leading retailer and wholesaler of branded footwear, apparel, and accessories with net sales for fiscal 2017 of $2.8 billion. Bob wants to know, fresh 52-week low. You know, I'm looking at this, and this is really ugly. And I don't know Genesco. I've seen the name many times, but I don't know it. I mean, I can't really talk about it. So what I'm saying is, looking at the chart, this looks like a really serious financial problem. And if that's a serious financial problem, probably it could turn into something that we need to speak economically, that is over the overall economy. But let me do a little, maybe I'll try to do a little work on it later this afternoon. Chart-wise, it looks as horrible, 29.85, and yet at the beginning of the year it was up near, so December it was up at 70. This is serious stuff. Something's going on. I actually wanted to call my webinar, that's right, skyscrapers, sneakers, and silicone. And then I thought, you know, I've spoken about skyscrapers. I want to rest. I just want to talk about the skyscrapers for a while. We've done that. I'm only now waiting for the icons to appear. And I'll talk about them when they come up because it's very important. But most significant is that the sneaker whole, you know, look at Shoe. Shoe is Madden. What's his name? Something Madden. Steve Madden. Had a really nice rally. Excuse me. At the top of the range. Needs to be watched. So far, nothing really wrong with the chart. It's just kind of stalling at 39.90. If you look at NKE, which is Nike, also had come off the bottom. Very nice. He had a big gap up. Good earnings report, I believe. Calling this an E in the daily. Calling this a C in the weekly, and the monthly is a B, coming off the bottom nicely. And if you look at the SMHs, that's the silicone, well, that for me was the semiconductor area. Coming off the top from 89.72 down to 80.92 in July, and then late June, and then running back to 88s. Good action. So I want you to kind of put it into context, but actually I said to myself, wait a minute, let's talk about this most important thing about the rolling over of strong sections and taking profits, and the rallying of sectors that were being hammered and really weak, and then seeing them rally nicely. That's what I really would like to focus on, because that could take us into year's end. But within that context, when I look at everything, I'm saying to myself, you look at the charts, you look at the sentiment indicator, you look at the VIX index, and there's some real strong signs to say that at some point we should have at least an 8% correction. But that correction could become much deeper if some factors are involved. And those factors will be, have we run out of sectors to rotate into? And that's really the issue. So when you're looking at the VIX, and then you look at something like a Microsoft, you say, hey, Microsoft's done fantastically. Stochastic at 94%, MACD's good, made a peak F/B last week. The weekly chart is in leg E up with highs. Microsoft monthly chart, leg D all-time high. Are we getting ready for some kind of a pullback in the sectors that have had spectacular news? And how on earth will it involve? Will you be able to see a rotation? That's really the issue. Can you rotate to see that the Dow? Let me just go back to the Dow. Can you rotate enough to have that weekly chart hold, even if there's a nominal new high just above 21,680s, maybe 21,690s, 21,710s, and then you get quite a sharp pullback? Is that enough to say, you know what? You're at 21,500 in the Dow, you go to 21,000, say 700. A 10% pullback is 2,100 points. So that takes you down to the 1970s. But wait a minute, you've got support in the monthly chart at 20,532. That's a 1,000 point decline. That's a 5-ish% decline. What would take it below that 9-period exponential moving average? Well, the near-term support is at 21,388. And we haven't broken the 9-period moving average once since the breakout on the upside back in April of last year. April of this year. Only once have we gone under the 9-period moving average in the weekly chart, the black line, and then it closed above it. Are we ready? Are we due? Is this time? I'm suspecting that we are getting close, we're getting close in time to some deeper pullback. And I talk about the 8% level. I'm throwing out a number here. Really, the number is 20,532. That's the 9-period moving average in the monthly chart. But in the meantime, look what's happened. Every time we get some kind of a pullback, there's a rotational aspect that allows the market to hold up, and something pushes it higher. Is this time different? And that's really what we're going to discuss in my 2-part webinar series over 2 weeks starting August the 2nd. Basil Chapman, Tiger Technicians Hour. I want to talk about some other specifics, and we'll be there in a moment.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Trading is different than investing, but the opportunity to take advantage of short-term trends is only one if you get the direction right. Direction leveraged and inverse ETFs offer bold trades on U.S. and international stocks and bonds. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi everyone, we're back. I'm doing Illinois Toolworks. Everybody got smacked today. Must have been earnings that came out. Maybe the earnings are good, maybe they were not, but the response is negative. And that's saying to me, leg E in the weekly chart, in the monthly chart, Illinois Toolworks, leg F in the weekly, and second leg D pullback in the daily, down 5 at 142.21. Not a good sign. Not a good sign at all. And so Illinois Toolworks, and let's see, other news. Oh, DSW. Isn't that the shoe place? I wanted to look at that and I couldn't remember the name. Yeah, DSW down 41 cents to 16.65. Isn't that DSW the shoe? I'm pretty sure I've seen them in a mall somewhere. DSW. If they are shoes, that was part I was looking at over the weekend. I couldn't remember what it was. Let me write that down. DSW. Will I write it so that I can actually see it? DSW. And I'll circle it. Let's see if I even remember to look. DSW. Yep, shoes. So the shoes, that's the reason why I wanted to do the skyscrapers, sneakers, and silicone webinar. But anyway, I decided to call it something else. But I will be talking about those because they're all part of it. We used to be short this from the opening call. Yes, we were short this a long time ago. That's why I remembered the name. Wow, look at that. Made an all-time high back in 2013, November at 47.55, trading now at $16.64. Wow. Wow, that's all I can say. Okay, so what I want you to do is this. I want to just do this high-grade copper, holding very nicely at the upper end of its range. This is the copper continuous contract at 2.73. So the mixed message I'm getting is here over the weekend. I'm looking at this. I'm looking at HGX. This is the Philadelphia. I showed subscribers that we went to the weekly charts of wood. That's the iShares Global and Timber Forestry ETF. And HGX went to a leg E last week on Friday, and a leg D extension in the weekly chart. Look how it's holding above the 9-period moving average, and the HGX is the Philadelphia Housing Sector Index, up at the top of its range, making this beautiful cup formation. Look at that. Gosh, I featured this, and why did I forget to look at it? Look at that. What a beautiful cup formation. Look at this left hand, right hand, left side, right side price time match. It goes from an all-time high back in July of 2005. I remember Tom and I were looking at this. We're trying to short. Eventually we got it right, but boy, it took quite a lot of turns to do that. At 293.66, it makes a high in July of 2005, and it plummets down to 54.31. And then it has a spectacular stair-step move, just taking time from 2009 until eventually it gets within 293.63. We're at 287 12. So it gets to within 6 points. And now, this month, as we're looking at it, that is incredible. Philadelphia housing sector. Look at that bold formation. Now, we saw this years ago back in the, I don't think I've got it anymore. Let me see if I can find it. XAU, I don't think I've got it going back anymore. I have a chart somewhere, but let's see if I can get it back to, yes, I do. Wait a minute, wrong one. Yes, I do. You see this pattern? At 41.61 back in October 2000, in November, I got a buy signal at 44 something, I think it was in the XAU. Why was I looking at it? Look at this beautiful bowl formation. Look at that. Beautiful. And then what happens is with the cup and ladle, Chapman wave cup and ladle, if it breaks out, it invariably goes to a D, and then it comes back and retests the lip. It did exactly that from the 1996 January, I think it was, high, around about 150 something, and it goes all the way to 200 and something like 219. I should put these prices in 209. Back in March of 2008, plummets, comes really, when I say plummets, I mean 209 down to 63. I would say that's a plummet in gold. And then it comes back in a V-shaped pattern, goes to 232.72 in December of 2010. This is the Philadelphia Gold and Silver Sector Index. And then it takes a tumble down to 38.36. I mean, that is a tumble, right? Then it has a rally up to the 200-period moving average at about 112, pulls back, and now it's chop, 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 going to the side. Reason I love to look at these bold formations is that within the context of a breakout, let me just go back here. Within the context of a breakout, how the left side high is handled, meaning cup and handled, or break cup and ladle, how the left side high will be handled if and when we get there, 293.66 from the July 2005 high is going to be really important. A snap right through it into the 300s would be really amazing. But in the meantime, rates are still very low. Let's see what happens. Question about Mosaic trading at 24.09. Oh, goodness, I had that all notated. Beats me. Don't know what's going on. All right, so let's go to, that's the daily. I'm sorry, that's the monthly. I'm going to get out of that in a minute. Right there. Okay, monthly. So Mosaic has gone to A, B, C, D, E. So it made a peak E on Friday. Just let me do this real quickly. Yes, it's holding very well. I decided that the choppiness was something that I was a little wary of. I've only got a plus sign here on this E because the MACD is still strong. Stochastics at 86%. My suspicion is that Mosaic is going to pull back a little bit, and that's going to be the test. It's at 24.10, down 27 cents. If it takes out 23.83 support, it means just hold off, nothing's happening yet, because that weekly chart will weaken once again. 23.10 is really the level that we'll be looking at. But at this particular stage, would I buy it? I must say it's nice action, but the weekly chart says give it another day. So what a peak says, Basil, would you add to that's the question. Would I add to Mosaic and Potash position now? I would wait, and I'd wait to see how does it handle 24.10. That's the 9-period moving average support. Let's just see how it handles the 23.85 to 23.67-ish area. And then text me or email me, let me know, because I want to look at it again, because if it's looking good, I think that would become a buy. Next, by the way, great chart work this weekend, especially the longer-term charts. Thanks. Yes, I spent a lot of work. I'm going to be discussing these longer-term charts. That's part of what this webinar is all about. Coming up a week from this Wednesday. And this Wednesday, I think it's Dave White. He's got a fabulous one, just some programming. It really sounds so interesting. So please check out front page of TFNN. So Potash had a little different chart pattern in that the way it climbed, the MACD was very, very strong, much stronger, and the stochastic was at 97%. It's gone. I'm calling it an F for now. It could have recycled to the upside. My thinking is that There should be some kind of a consolidation, but I wouldn't add to it now. I think it's looking really good. I'd probably say I'm going to miss saying add if it goes above 18.30 and it's at 1783 potash, right? Potash, that is potash core, potash. But I would like to see how it tests 1767 to 1747. If it pulls back and then sits there, holds nicely, I would say that's a chance that you could add. But right now, I'm just saying, a little extended, have a little patience. I'll be back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, everyone. I was asked about Dillard's. Dillard's is Inc. A shares trading at 67.30, down 61 cents. Or was I asked, or was it just a statement? Dillard's, department stores, wave count, and would you buy at any point? Now, this is very interesting. I don't know if I've ever been in a Dillard's. I think I've seen the name. Do we have them here in Massachusetts? I'm not sure. But what I am going to say to you is that it's just the non-Amazon stock. It looks like an Amazon. In fact, it's done beautifully. It's gone double bottoms down at the 45 area. Rallies the first time to two peak D and an ABCD quick up to the high of the 10th of May at 58.62. Pulls back again to test that 45 area, 45.51 back in May. And then boom, boom, ABCD. Pulls back, ABC, it's in leg D right now, pulls back. Yes, they're doing something right, and that monthly chart is starting to improve. I wouldn't get too carried away, but I would definitely Midwest, maybe. Yeah, I like it. I think it could pull back from 67.30. Have a little patience because every time it's gone to a D, it's had a pretty decent pullback in percentage terms. So at 67.30, I would between 63.30 and 61.30. So it's a 2-point differential. I would say I'd have a little more patience. I'd try to wait for the 64.30 area, and then just send me an email or ask me the question. Let's see what happens. I must allow it a little room to pull back. It doesn't have to. I'm just saying I'm allowing a little room. Why? Because it's had a fabulous leg C to the upside in the weekly. All of a sudden, the 73.31 level from the 200-period moving average has become in focus. It doesn't mean to say it has to go there, but if it goes even just a little above today's high, if it can get to 70.20, that 73.31 200-period exponential moving average could become a magnet, and that's what you want to see. It needs to get Arkansas-based. Okay, it needs to get a little closer so that you can get that magnetism to work. Otherwise, it's just not going to do anything. It repels it. So give it a little moment. Let's see what happens. Keep it in my mind. Bob said, just email me when you see that again. Next question was the wave count, an Elliott wave on same chart. Oh, wait a minute. Let's see. This is a good question. Chapman wave and Elliott wave on same chart, a little overwhelming. Oh, sorry about that. On what chart, though? Maybe want to show each one separately, clear picture, doesn't jump out. Oh, okay. When I have these, for instance, here, when I have them, I've tried to make them a little fainter because I do realize that it's something that I'm working on, still working. It's a work in progress for the last 2.5 years, a very detailed work in progress, and it does work very often, but sometimes I have to move the 5 or move the 3. So that it's not 100%, absolutely not 100%, but it's really getting much better accuracy than I ever thought it would. So that's not Elliott wave, those are Chapman wave 5s. Nothing, at this point, I have to say, only 5 is the coincidence with Elliott wave, the number 5. Otherwise, there's pretty much nothing that matches the 5. Not even the wave 1 and wave 3 must be as big or bigger than wave 1. Even that doesn't apply in my work. It's something completely different. I'll try, maybe I'll make it a little fainter, but I got to keep those there for me. Next question was the TNX, approximately 6.18% retracement of the rally in yields. Okay, any breakdown below 2.2% on the TNX and bear market ZNU is over. And when will companies in the Dow or the S&P cancel or not pay dividend? This will be necessary to stop this automatic buy every day in the Dow, which has dividend yield 2.7. Hey, GT, that's great information. Thank you very much. I'm going to try to kind of I'm going to savor it for a little while. I'm not going to make anything of it. I'm just going to let it sift in my mind and sort itself out. Something will come to me. But those are very good ideas for throwing at me. Good. And HIBB, I'll talk about that.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,